Hi traders, good morning, good afternoon, good evening. I hope all of you are doing good. In today's video, we are going to start with our analysis on Nifty first, Nifty, and then we look at Bank Nifty on multiple time frames. And then we will touch upon an important point of what is the holy grail of this market. It is not strategy, it is not anything else. I will show you what it is, and it is a very simple thing which most of the traders ignore. So let's get started. So we are on a Nifty chart. Okay, as you can see, I have selected the monthly time frame of Nifty. So what we will do first is we'll try and map the levels for Nifty on a monthly time frame. So this is our high and this is our low, and the market has been consolidating since July onwards in this range till October. Okay, July, August, September, October, like 4 months it is still in the same range. Oh, sorry, not 4 months, it is almost a year now. It is there in the same range of high and low. It has touched the low, and but it is still in the same. If you're wondering what is this yellow line, this is a 5-period moving average which I have plotted, and we have an RSI. I am using a very different settings which you will come to know during the video. So let's get started. So as you can see, this is pretty much in the same range on a monthly time frame, and if it has to move exponentially, it has to break this high, which is 18,599, or move down, it has to break this 15,255. So that is where you will get a major move if you want to capture a trend. Okay, so this is the monthly time frame. Let's look at a weekly time frame. So first we go to the higher level and then we mark up our levels. Now we see which are what is the trend of the market from here. So if we look at the trend, let's plot the trend line from here. Okay, as you can see, the trend, we have 3 touch points, but it is violated couple of times. It can happen, it can violate and come down, but you can consider this as the resistance. Okay, this is an entire zone, so consider this as an entire zone where the price can move into this zone and come back, and this is a powerful reversal candle which we have got here. So maybe you can just mark this one. Okay, so this is our bear 180 setup when one green candle is completely taken over by another red candle, and from there it has come down. Now it is still holding this level. Okay, so now let's look at the left. Okay, let's look at the left and try to see if we can find the nearest levels. Okay, so which is our nearest level is this particular 50% candle. Okay, I have marked this basis the 50% rule, where we have 50% candle. So there is a war going on between bears and bulls, so which is what creating is this kind of candle. Whenever some side wins, then this kind of candles will form, which shows the power. So we have one looking at the left, which is the freshest zone. This is the freshest zone. Price can come till this zone. So now you might think that this is zone, but this zone is already violated from these candles. So if I look left, first level of support is at this level 16,000. So if the market crashes from here, this will be the first level, and it's a very good zone where you can buy. And looking at the resistance, we know that the resistance is at, look at the left, which is the highest point. This is the fresh point where this is a 50% candle where the market has reversed. So this is our resistance zone. So we have identified a weekly resistance and support. Now let's go to the daily time frame. Now see if it makes any sense for us to map the levels here. So we had a candle which opened in this zone, okay, which is a 50% zone, and from there it started dropping. Now if you notice, what is the let's look at this. Look at this entire move. Okay, let me delete this yellow circle here because we have already understood this concept. Let's look at the entire move by using a Fibonacci retracement. So this is a low and this is the high point. Okay, so I've plotted the low and the high. So now market has come down. When it came down first to 0.236, which is 23.6%, it has retraced from there, went again, then came back and broke this level, then touched 38.2. 38.2 first instance, it has not got any bounce. Then from there it dropped a bit, but it has not touched the 50% levels. Okay, it's somewhere close to 50%, and from there is a bounce till again 23.6. okay, if you see, this is one bounce and it has not formed a lower low after this. And also one important point is that we have a 200 period moving average giving the support to the market here. So this is a very strong support. Whenever you see price dropping to this 200 period moving average, any time frame, 5 minutes, 3 minutes, 15 minutes, 1 day, it is always going to act as support. Trust me, if you just want to play buying game on 200 period moving average, you can find the best of the best accuracy levels at this level. But you need to understand there can be volatility at this level and your stop losses might get triggered, so you need to be prepared for such kind of situations. So it has gone up from here, retraced back, okay, and then shot up, and from there again it dropped back till this 200 period moving average. Again it shot up and dropped back. So now I somehow feel that the market is going to be in this range, trying to give a breakout on the other side. So we have to see on a lower time frame, maybe a 1 hour chart, to see if we can find some nearest points. The nearest point is this point, where is your, on the left I look at the fresh point wherever there is a resistance. So this is our fresh point where we have resistance, and then we have fresh on the left where there is support. There is support here. Okay, so this is a support point. So 17,000 can act as a support, big time support, because look at the time spent by the price in this range. Okay, and you see and notice these kind of candles and compare that with the RSI. Whenever the RSI goes below and the candle is forming like this, then you are getting a reversal from there. Okay, it happened once, twice. Here low, RSI is also low, it's not shown any divergence. So RSI is also creating similar kind of a pattern. From there it gapped up, this was the high, and again next high is this much, so this is also not a divergence. From there it dropped. So now we have to see if this is in this 50 to 20 range, it is in a sideways zone. So let's see what will happen on Monday. Mostly I am expecting a gap down into this zone, which is 17,766. There can be a gap down in this zone, and from there the buying can come. So when the market opens, if it gaps down and you see RSI below 20, then wait for a candlestick pattern to give you an entry. Okay, it can be a complete bull 180 degrees, which can be a shift in complete red candle taken over by a green candle. You can go for a long with a stop loss below it. Okay, so that will be a simple thing to do. Let's go to Bank Nifty. Bank Nifty on a monthly time frame, it is the same story. Weekly time frame, it is little bullish, but there is a resistance at this level and support at this level. If you see this support, it's already been taken. It can breach if it comes down, and this can be a level. Coming to 1 hour time frame, holding 200 period moving average, which is very strong. So the bank nifty can be strong if it opens above this. If it opens below this, then it is definitely going to free fall from here to this level first and then to this level first. So there is this level support. Okay, this can be your support because it's a fresh zone, it's not breached at all. Okay, so now on a 3-minute time frame, you can see it is holding the 200 period moving average. So always combine your price action with your support and resistance plus your RSI to get the best of the results. Now coming to our main point today, which is the holy grail of the market. So what is the holy grail of the market? Okay, so let me tell you what is a holy grail. Holy grail. You keep searching for this all the time, and we expect that some strategy or something will give me confidence to make money all the time. But the holy grail is not in the strategy, not anywhere. There is no secret like that you're going to make money every time. The holy grail, only thing which you need to understand is this one, which I'm going to show it as an example to you. Okay, your risk to reward is the holy grail. Yes, any session you go, wherever you want to learn from an experienced trainer, they will definitely cover this topic, risk to reward. Okay, and most of the people don't pay attention to this particular thing. Okay, so in a simple term, if I have to tell you that you have an accuracy, you have a strategy which has an accuracy of 50%, okay, or even say 40%, and you have a risk to reward of 1:2 or 1:3, even with 40% you can make money. How? Because that is the rule you are following. That means if you are losing, let me give you an example. If you're losing 1, winning, you're winning 2. So for example, if you see an example of 20 trades here, okay, we have a risk. We take on every trade a risk of 2000. That means my stop loss is fixed at 2000, and if that 2000 is hit, my stop loss is hit and I am booking the loss. And if I win, this is a simple 1:2 reward. If I win, I will make double of it. Okay, simple thing. So assume that I have taken 11 trades. 11 trades are gone, stop loss hit. Okay, so how much money did I lose? 22,000. Now say assuming next 9 trades go in my favor and I hit my target, which is 4,000 per trade, I still end up making 36,000. So how many trades? 11 trades. So even this is like less than 50%. 50% is this, so it is about 45%. So assume that you lose one more trade here. Okay, let's see if you're positive or not. Even then you're positive. Okay, say that you lose 1 more percent here. Are you positive? Still you're positive by 2000. Now assume that now you're negative. How many trades? This is almost 14 trades out of 20. So how much is 14 out of 20 percentage wise? So you are 70% wrong. That means your accuracy is only 30%. This is the worst of the worst trading accuracy. So even if you have worst of the worst trading accuracy, 30%, you are then going in loss. Okay, so any good strategy, even if it gives you 50-50 chance, okay, 50%, still you will be profitable in the market. So most of the people don't pay attention to this, fixing the loss and let the rewards give you 1:2 or 1:3, or let it open, run. One trade can give you 2, 3, 5, 6, but have a rule and a plan. Plan is the key. Okay, always you should have, my entry is this much, my stop loss is this much, my target is this much. So you should always have these journaling available, stop loss and target, and keep checking the trades like this: trade 1, trade 2, trade 3, trade 4. In your trade 20, you will come to know whether you are profitable or not. It is a very simple thing and it's a very boring thing. I'm telling you, making money is boring. If you become a good trader, it is going to become very boring for you, because you're going to manage only this part with a strategy and do the same thing every day, and you will get the results which are quite good, exceptional, but it will be highly boring. If you want excitements, you can forget this. You will have a lot of excitement. The trade will go left, right, center, up, down, adjusting this, that, doing every kind of thing, but still you will lose money. Okay, you will get excitement for sure, but you will lose money. So pay attention to what I'm saying, and risk to reward is the important thing. Whatever you trade, always trade with 1:2, 1:3. So whenever you're picking up a strategy, also look out for strategies which can give you like a big reward. Okay, assume that you're picking up your strategies that whenever it goes below 20, I am going to buy nifty. Simple strategy. And your stop loss will be, say, 20% of whatever price I buy is my stop loss. Put that rule and just try to follow it for 20 trades and see what is the result. You will be definitely positive. Blindly follow below 20 RSI, I am going to buy nifty, 20% is my stop loss. You will be definitely getting a upper hand within 20 trades. So check this, but discipline is the key, and you have to follow it. You have to follow it religiously. This sounds very simple, but it's the most difficult to do for all the human beings, because we humans have a tendency to behave differently every day. Even if you're going and doing the same thing every day, there will be change in your thought process. The moment, for example, if you're going to school every day, or if you're going to college every day, if you're going to work every day is different. Okay, you think that you're getting up the same time, but no, there will be a difference of 20 minutes, 15 minutes, eating breakfast, going out, stepping out, taking the car. There is a difference in, like, it's not like exactly like machine precision we have. We always have some kind of lags and some kinds of things which we speed up, so which is going to be a natural process, but that is going to hamper you in your trading career, because it is the same way you're going to function there as well. But here you have to be very mechanical and put the trade at the same time with the same logic, and have your rules written that, okay, this is my stop loss, I have taken the stop loss and gone. Be happy to take the stop loss, because taking the stop loss is the happiest thing for you, because you have saved your money. Okay, if you don't take the stop loss, then you are going to lose big. And always look at the trading possibilities, not for one trade, but the series of trades which you're going to do in the near future. Maybe you should always think that 20 trades, 50 trades, I will be positive. If you have the confidence with this kind of calculation and back testing, definitely you will be positive. I'm telling you, even I have faced this, and this is the biggest problem, that once you start following a strategy and keep looking at the market, you try experimenting, you keep experimenting, you try this strategy, that strategy, and you keep changing your stance. One strategy is working for you, suddenly you do something different and entire profit is gone. So don't do that. Make it very boring, very systematic, and just spend a little time putting up the trade, taking the profit or taking the loss, and close it. That's it. If you see all the professional traders, they do things like this only. They don't bother whether that trade is positive or not. They got the entry, the rules are defined, stop loss is there. Either it will give me return, or it will take my stop loss. That's it. There are only two rules. Make it very simple. So I hope you're understanding what I'm trying to say, guys. And this is my best effort to make you understand what is that you need to do as a trader to become positive. Okay, I hope you like this video, and please do subscribe, share, and Send it to all your friends who are interested to learn and maybe struggling a bit in aligning themselves. Thank you so much for watching and have a great day.